So welcome everybody. This is Adam Halpern. By now you should know I own Indicator Warehouse, and I have Eric Semp with me today, who's going to be doing most of the talking, as he does in these things. So for today, this is part 2 of getting to know Raptor 2.0. So the purpose of today was to be able to see these tools in real time. And also in the prior session, we focused a lot on the actual signal generator piece of this overall solution, the Raptor piece. However, the total package includes much more than just the signal generation, as I think that's a good reflection of trading in general. It's not just about the signal.
Well, good morning, everyone, and welcome back. All right, so just a real quick overview of the Raptor trading system, the improvements that have been made. You can see here on the NASDAQ chart that we had the early warning that one of our high probabilities signals were about to print. And we've got three basic signals that we look at. We look at...
Eric, I'm sorry,
yes.
I didn't interrupt. Are you sharing your screen yet? I don't think you are.
Oops. Thank you.
It is. Eric's on the West Coast, folks, so I have to force him to get up early.
Very early. Very early.
We love him. Okay, there we go.
Oh, that looks better. Okay. So just a very quick overview of the new changes to the Raptor. It focuses on generating high probability signals, and it gives you early warnings that these signals are going to begin printing. Because, of course, a major problem that a lot of traders have is knowing when to pull the trigger. What signal should I take? Well, the new Raptor helps you identify these high probability signals, and it gives you plenty of warning to take advantage of these signals when they start to print. Now, the whole Raptor package doesn't just include the high probability signals. It also includes things like the trade manager, the mean Renko bars, the LogiCounter, and my personal favorite, the ultimate support and resistance suite. So we're going to take a few minutes and we're going to take a look at each of these other components. Let's start with the mean Renko bars. So the mean Renko bar is the charting style, the default chart style for the Raptor trading system. Now, to be honest, when Adam first told me about these mean Renko bars, I wasn't thrilled because I cut my teeth on a 5-minute chart, right? I was a 5-minute chart trader, and I was a little reluctant to take a look at these bars. But he said, try them for a week, see what you think. And you know what, folks? No word of a lie. After using them for a week, I would be hard-pressed to go back to my 5-minute chart. Why is that? Well, the beauty of the mean Renko bar is that it shows you very plainly who is in control of the market and where support and resistance is occurring. Take a look at what we've got going on here right now. We can see that there's obvious support down here because prices are being rejected at that level. You know what? I'm going to give me a second here, and I'm just going to produce a quick 5-minute chart, and you can see the difference between the two. All right, here we go. Here's a 5-minute chart that I just built. And you can see it's not quite as plain that there's a support level down here as it is versus the mean Renko bars. Same thing with the resistance. Okay, you can see in hindsight that there was some resistance off that 5-minute bar. But again, it's not as plain to see as it is here on the mean Renkos. See how they clearly identify that there's obviously some resistance to prices going higher there? The other nice thing is that it becomes very obvious when there's a change in trend. And this is a big deal for a lot of people. A lot of people don't know when it's time to get serious about taking counter trend trades. Well, with the mean Renko bars, again, it makes it very plain when there's been a shift in momentum. So you can see we obviously have upward momentum here. Prices have come down a little bit. We've broke some minor support levels through here. we're challenging a major support level, which also happens to be on our support and resistance line, which I'll get on in a little bit. But notice prices rallied, hit the other resistance area, and then failed. Now we can plainly see that the market is changing trend. And this isn't a one-off. This happens time and again. So we got prices coming down. They try to recover the lows. They can't. Oops. They go through the highs. They break the resistance area. Again, that blue line, which I'll talk about a little bit more in detail later. And then we get a change in trend. Just one more example. I'm not going to take all the time with this, but you can see here again quite plainly. Market comes down, fails to recover the trend, and then we produce actually our counter trend signal, which is our number 2, and then prices start heading lower from there. So that is a huge benefit to trading these mean Renko bars. You can see very plainly which side is in control. And once you know who is controlling the market, well, then it makes it that much easier to buy and sell, right? And keep yourself on the right side of the market. And after all, that's the name of the game, isn't it? Okay, so those are the mean Renko bars. The LogiCounter is native to the mean Renko bars. That's this little parameter that you see here at the end of my chart. Let me move that up so you can see it a little better. This the LogiCounter forecasts where this bar will finish printing. So if it finishes lower, the low of the bar will be 5,001. If it prints higher, the high of the bar will be 5,005. Why is that important, you say? Well, when we're printing a signal, like when we were printing our number 3 signal right here, I can anticipate, or knowing where the bar is likely to finish, I can anticipate my entry. So if I know I'm producing a signal because I've got the warning dots, I've got the alert printing in the top right corner, I can anticipate where that bar will finish, and that allows me to get my order in before it actually prints. So it gives me some time. I'm not scrambling at the last minute trying to get the order on, hit the submit button, get everything in play, and then, you know, if I'm a little bit too slow or the market's a little bit too fast, the market runs away from me. So the LogiCounter, very, very helpful tool in helping you plan your trade. The support and resistance suite. This is perhaps one of our most popular indicators. Yes,
Eric, let me just step in real quick, if you don't mind.
Mm-hmm. Yeah.
And that's perfect. Just leave the chart right there. So, folks, I'm assuming most people on right now are new to Indicator Warehouse, and so there are some things that we take for granted, and I think sometimes we forget to mention because they're subtle, but they're important. So, obviously, very clean charts. We're known for that. But the Raptor is a very unique design because it looks like it's a classic single screen trading system like everything else that's out there. What's actually going on behind the scenes is much more elegant, if you will, from a coding perspective. So the Raptor is 3 separate trading systems all converged into one trading chart. And so one of our other products that we brought out in the past called the Diversified Trading Systems uses 3 distinctly separate systems. One is a trending system, one is a scalping system, one is a swing trading system, and they're all running at the same time. What we did was we took the math from all of those systems and we put it into this one system called Raptor. In other words, that filter at the bottom, which is currently magenta, that is the entire trend trading system squeezed into that one visual element. So it is extremely useful at defining the overall bias or trend of the market. The paint bars that you see here, those are powered by the scalping system. And so the entire scalping system is what powers the visual element of the paint bar. The alerts are a variation of the swing trading system. And so you have all three of these working together, and that's what makes Raptor so unique. In addition to that, the visual elements you see on the chart are powered by different size Renko bars. And so you may be looking at an 8-tick Renko bar, but the visual element of the filter at the bottom may be powered by a 12-tick Renko bar, and the bars are a 6-tick Renko bar. So you have these I won't say time frames, but multi-size Renkos all functioning together on this one chart. Now, in a way, who cares, right? It's kind of like I really don't care how the engine on my car works. I just need it to drive. But I did want you to understand the intelligence and the design that has gone into this overall system. Okay, thanks, Eric.
No problem. All right, so I was just about to get into the support and resistance suite, and it's perhaps one of our most popular indicators, and for good reason. The support and resistance suite is not floor pivots. They are not Fibonacci retracements. They are actually much better, and I'm saying that all modesty aside. It's an assortment of 21 support and resistance lines that are a forecast for today's trading. The three lines that kind of set the tone for the day are these three right here. The gold line, which is the median line, it occurs right in the middle of the assortment. Then you've got the primary resistance above and the primary support beneath. Once the market gets below, say, the primary support as we are today, it's going to tend to be more bearish, and that's why the support lines are printed in a reddish tone. And then if it gets above the primary resistance, it tends to be a little bit more bullish, and that's why the resistance lines are printing a little bit greener. There's a lot of ways that you can use the support and resistance suite. A lot of traders have their own ways of trading support and resistance. One of the easiest ways to use the support and resistance suite, and one of the ways that I use in the trading room all the time, is as a profit objective. And you can see that, say here off our number 3 signal, which is a continuation signal, it would have made a very nice profit objective to use our support and resistance line. Likewise, say here off of the number 1 signal, you could have again used the support zone as your profit objective. A lot of people like to use it as a means to rolling their stops as well. So when the market breaks through and closes below a support or a resistance line, they'll start to roll their stops in on the other side. I know Omar Al-Tuki, the fellow who was trading the DTS package with the support and resistance suite, the Forex markets, that's the way that he'd like to do it, was to use the support and resistance lines to cover his trade. So once the market traded through, closed on the other side of it, that would give him a reason to bring his stops down and use that support or resistance level. So those are the two primary ways of using the support and resistance lines as profit objectives, as well as means of covering your trade. Now, typically, once the market breaks say the primary, we actually closed or opened below the primary this morning. That's this blue line, the primary support. It will have a tendency to move at least 2 zones. So here, allow me a moment to go back to yesterday's session, and we'll see what happened yesterday. So here we are, the market floundering a little bit, bouncing between the median line and a couple zones down here, but then notice what happens. We get a little bit of a rally. We produce our number 1 signal, which is our cloud crossover signal. It usually initiates a trend. We break out above the primary resistance, and did we get 2 zones? Oh, no, not quite. Almost reached the 2nd zone. So this is what I would refer to as a zone. This is zone 1, so that could be profit target number 1, and there would have been profit target number 2. Now, when you're using the support and resistance suite, it's important too to remember that these lines are predictive. What that means is that they're a forecast, a prediction of what is likely to happen today. So with that in mind, you don't always want to trade them right to the number. Sometimes they're amazing and they will hit right on the number. You can see here we got within a couple of ticks of the support line. But here we fudged it by a couple of ticks. That doesn't negate the value of the support zone. In fact, a lot of times we will consider this more as a zone. And now that we can see that the market is struggling here, well, then we have a pretty good idea that if it trades below these lows and closes below this support line, then it's likely to move lower. And the next obvious target would be down here at 49.8475, or effectively 49.85. All right, so there's just a really quick overview of the support and resistance suite and some of the ways that we use it in the trading room.
Eric,
Yes.
let's stop in real quick. Just side note, it's a funny story. When we were first designing these, and I hired a tester to test them out, and in a classic tester, testers tend to be extremely literal. And she called me up just in a huff because the lines didn't work, and that's because price went right up to the line but didn't quite touch it. And I had to remind her that, you know, these are these are, as Eric put it, based on mathematics, right? You don't go down to the pit and there's these imaginary lines floating in the air that all the traders know about. And so, I just made me laugh. But one of the things that we integrated into the design is that you can have lines on your chart, or if you notice there's kind of a gray area around the lines, you can define the zone. You can actually have that shaded area whatever you want. So some people take that shaded area and make it thicker, because again, support and resistance it's a zone, right? There's a range, and so you have the choice of either just lines, a shaded area, or both, which is how it defaults to. So again, it's some subtle user design, but it does it helps you align the way you're using it more to whatever your personal preferences are. Okay, thanks, Eric.
Yeah, thanks for pointing that out. I made the zone a little bit more opaque here so that it stands out a little bit more. Yeah, and there's actually some pretty sophisticated math that goes on with producing these support and resistance lines. And they're not just based on the previous day. They actually take a lot of things into consideration, including the price action itself. So they're very sophisticated piece of software. All right, so the kingpin now, the granddaddy of the tools, is this thing that you see right here in the right-hand margin. This is called the Trade Manager. This is a ultra sophisticated piece of trading software. When Adam first told me his intention of making the Trade Manager, I didn't think it was possible at a retail level. I didn't think a personal computer had the capacity to run this type of software, because this is usually the kind of stuff that you only see in big hedge funds or on Wall Street firms. This tool here allows you to trade exactly like the big boys. And what it does is it protects your capital. It protects your account. And it does so by never allowing you to risk more than you can afford. So let's take a look at a couple of the features here. Perhaps the most important feature is this little button right here, the risk percent mode. There's actually two modes available for Risk Manager. You have a manual mode, which will default to whatever quantity you set here. So that will allow you to trade X number of contracts every single time. So you can see right now it's set at 1, but I can change it to, let's say I want to trade 3 contracts every single time. So that means every time I take a trade, regardless of where I place my stop, I'm always going to have a 3 contract trade. All right, so that's feature number 1. The risk percent mode defaults to this value right here. Now, by default, I have it set at 2% of my trading capital. What that means is that regardless of where I place my stop now, whether I keep a tight stop or whether I keep a looser stop, the risk amount never changes. What does change, if you notice, was the quantity traded. If I set up my trade this way for $300, and again, that's 2% of my capital. Yours may be more, yours may be less. But if I set it up this way, I'm trading one contract. If I set up my trade down here, I'm trading 3 contracts. But what I'm doing is I'm capping my risk. I'm not letting my risk get out of control. Generally speaking, risking 5% or less of your capital is considered prudent, and 2%, most money managers and traders agree, is the ideal. The reason this is so important is that professional traders know there's a very real possibility that you could take 10 losing trades in a row. It's unlikely, but it is possible. So if you're like most traders and you're routinely risking, say, 7, 8, 10% of your trading capital, well, you don't have to be a mathlete to realize if you take 10 losing trades in a row, you've just effectively blown up your account. You can no longer trade. But if you're capping your risk, say at 2% of your trading capital, and you happen to take 10 losing trades in a row, as unlikely as that may be, you've at the maximum experienced a 20% drawdown. That kind of loss, while admittedly is very unpleasant, is not going to ruin you. So that's a very important factor in your trading, and one that is woefully ignored by most traders, and to their own peril, I might add. So the trade manager allows you to keep a proper stop, and there is a proper stop. The stop placement, people are always asking, well, what kind of stop should I use? All right, let's use this here as an example. There is always a proper stop for every trade, and the stop is relative to your profit objective. So for instance, if you're looking to scalp, say, in and out of a trade, so we'll tighten our profit objective here, and I'm just looking to scalp now off of this number 3 signal that's about to print, I can get by with a tighter stop. I can maybe run my stop above these recent swing highs because I'm just looking for a very short-term objective. If, however, I'm looking for a larger profit target, let's say I want to use my support and resistance lines, and I'm going to set up, I'm going to want my profit down here. Well, this is effectively more now like a swing trade. I have to leave a more reasonable stop. The more reasonable stop when you're swing trading is above the last swing, which would be right here. These would be a little bit too tight, or traditionally I tell people in the room 2 swings back is usually pretty safe. So this would be swing 1, there's swing 2. And our profit objective is now down here. All right, this type of trade is going to give you a little bit more staying power because, as you know, with a swing trade, sometimes the market likes to chop around a little bit before it gets to its profit objective. One thing about the Raptor system, though, it is very good at picking up immediate market momentum. You can see in this case, we had very little blowback to the signal, and the market failed or wasted no time getting down to the profit objective. All right, and this is very typical. You can see this printed just a few minutes ago, and this is how this type of thing unfolds. Now, once again, once the trade is underway, that doesn't mean you have to leave your stop up there. But knowing when you set up your trade initially, you have given yourself an excellent probability of success because you're not strangling your trade. Right? You're not doing like most people. Most traders have a tendency that if this is their signal, where do they put their stop? Right there. Right? I'm going to give you 1 bar. That's it. 1 bar to move against me. And, you know, truth be told, I know a trader like that, a good trading friend of mine. He will routinely run like a $30 or $40 stop loss. That's it. That's all he'll give the market. So his stop is sitting like right there. And I said to him, and he'll routinely take anywhere from 5 to 10 stop outs before he catches a runner. So I said to him one day, I said, Tom, why are you wasting, 30, 40, 50 bucks 5 times? That's a $200 loss. Why don't you just leave a $200 stop? Because your stop loss is not a loss if it doesn't get hit. I'll let you think about that for a moment. A lot of people forget that. This is not a loss if it doesn't get hit. So why would you reduce the probability of your trade by jamming in your stops ultra tight? Why not give yourself the luxury of having a trade work out, or give yourself a chance of having the trade work out by running a reasonable stop? And you know the best thing, folks? If this market brought me in and then turned tail and gave me zero opportunity to adjust the trade, which, by the way, is very unlikely, but gave me zero opportunity to adjust the trade, turned tail, and just went screaming higher, I still have not lost more than I can afford. Yes, it's not pleasant. Nobody likes to lose money, but I have protected my capital. I haven't damaged my account to the point where I can no longer trade. Here's the mistake that other traders make. They say, oh, I'm just a small account trader. I'm only going to trade 3 contracts because I only have a $10,000 account, right? So here's their signal. And what do? Is they'll go in like this, they'll set up their trade, and where were we? We were 528, I think. 528, profit target down here. Okay, so you saw before the risk amount was just under $300. I think it was $285. If the market did the same thing, if it brought you in and turned tail and stopped you out, you've just lost nearly $900. If you're trading a $10,000 account, that's 9% of your trading capital. How long do you think you can continue to do that before you damage your account? Well, you've already damaged your account. You've just gone from $10,000 to about a $9,100 account. So those kinds of hits are going to be huge. If you're trading a $10,000 account and you take a $300 hit, that's not going to cripple you. Taking the nearly $1,000 hit, that's what's going to bury your trading account. All right, so that's feature number 1 of the Trade Manager. If that weren't enough, the Trade Manager also has stop strategies with it. Those are these blue dots that you see here on the chart. There's actually
Eric,
yes.
I'm sorry, I just got to step in real quick because I'm on the front lines with this. People usually talking to me before they get to Eric, and so I get to hear day in and day out. I have the luxury of trying to make this case that Eric just did so eloquently over the phone, and it can be frustrating because it's counter to probably what most of you all have learned when it comes to, quote, money management. And most people I talk to either trade with a fixed 1 contract, 2, and heck, Eric was being ambitious there. Rarely do I talk to someone who's trading with a fixed 3. And what Eric I really want to bring this to the forefront. Eric was talking about a fixed risk amount, not a fixed contract amount. The fixed risk means that exactly what he said, you will never trade more than X percent of your account, let's say 2%. Before you even enter the trade, you already know the most you would ever lose is 2%. And psychologically, that takes a lot of stress out. You don't have to wonder how much you're going to lose each trade. You already know if it was a bad decision or the market just turned against you, 2%. And most people I talk to, their money management strategy is I'm going to trade with 1 contract till I build up my account, and then I'm going to start trading with 2 and just keep going that way. The problem is that's an incredibly tedious and difficult way to grow your account. And so I will say Eric's the master at helping people grow small accounts, but I just invite you to be open-minded about this because it will go against what you typically hear out there. But then again, what you hear out there, let's say 90% of it all sounds the same. Well, if 90% of traders fail in this business, as we know, and you're trading like those 90%, I don't see why you would ever expect your outcome to be any different. And so what we're talking about here is that what 10% of the traders do, and they're the ones that are successful. So just be open-minded is all I ask. Okay, Eric, thanks.
Sure, Adam. And I'm glad you made that point too, because just a real quick story from one of our owners. Um, Now, don't get me wrong. We all have to start at some place. If you're trading a small account, you may not have much of an option other than trading single lots. But this particular fellow, he was trading single accounts, and he'd make a little money, he'd lose a little money, and 3 years later, he was more or less where he started. Then he came to us, and he got our tools, and he got the trade manager, and his trading allowed him to start trading multiple positions. So he would use his risk mode, and he would set up his trade. And here, a second, let's just use the targets. And he would set up his trade, and he would start being able to trade 2 or 3 or 4 contracts. Now, all of a sudden, he was making money. So it's actually two sides of the same coin. Not only do you have to protect how much you lose so that you don't lose more than you can afford, but you also have to have the ability to maximize your earnings. And you'll never be able to maximize your earnings just trading singles. Yes, your losses will be smaller, but you will never earn as much. So for instance, in this trade right here, here, let's just change this up a little bit. We'll go all in, all out on target. So if we set up a trade like this, okay, you may be trading a single, and you may only be losing $145, but you're also only going to make $50. I'm earning twice as much as you, and I'm still not losing more than I can afford. The moral of this story is, after a year of trading this way, he quit his job. 2 years later, he is trading other people's money full time. So I call this the best kept secret on Wall Street. It really is. Like Adam said, 90% of people are losing money, then obviously 90% of people are doing things wrong. What are the 10% doing right? Well, they're protecting their capital. They're protecting their risk, first and foremost. They're taking high quality signals, secondly. Third thing is they know how they're going to manage their trade. And this is where the trade manager shines as well. We've got 16 different stop strategies to choose from here. They're all fully customizable. Right now I've got the ATR strategy on. I can make it a little bit more aggressive if I like, or I can make it a little bit more conservative. Whatever I want. Once I've enabled this, and let's say I'm in a live trade, the trade manager will automatically roll my stops according to this stop strategy. So let's see here where the parabolics are at. Okay, I don't have the signal just yet, but just for demonstration purposes, I'm going to hit a buy. Now notice the trade manager has given me my entry. It's automatically trailing a stop according to my stop strategy, and I can change this now. Let's say I feel that's too tight and I want to go below the swing low. I can change that. Notice too I have an auto break-even function. You can turn this on and off, by the way. You don't need to use the auto break-even. But now I have a way of managing this trade. So if the market continues higher from here, I can change my stop strategy. I can lock in more profit. I can take some of the profit out of the trade. The options are almost endless, what I can do with this position. So the trade manager with these profit strategies, here I'm going to close this position out. Just a great feature to have. And like I say, there's 16 different stop strategies. You can be more aggressive. You can be more conservative if you like. Whatever suits your strategy. Okay, I think that is everything that I had to go over. Now, I know I went over it very quickly. The Trade Manager also has this OCO function. Let me touch on that for a second. The OCO stands for one cancels other. So occasionally you're going to find times when the market is, say, making a sideways channel, and you think, oh, maybe I'd like to bracket that. Well, you can use your OCO function. Oops, it's going to default to this amount down here. So let's say I want to take a single on a one cancels other type order. So I can put an order there to sell, say put an order up here to buy, and now I've effectively bracketed this market. Now these orders are live the moment you put them on, so you can move them around. And once this fills, so long as I have my stop strategy enabled, I will automatically get a stop with my trade as well. So let's say we go back here to the ATR. All right, so if it fills here on the short side, I'm going to have a stop. Well, the ATR is going to flip over. I'll have a stop somewhere up here automatically. And if I get filled on the buy side, I'm going to have a stop right down here where these blue dots are at. We'll just stay with this for a second and see how that plays out. But I think we've also got the buy, sell buttons. We've got the close button. Oh, yes, I almost forgot. The panic exit. This is a new feature on the Trade Manager. I don't know if many of you have been around long enough in the trading world, but after 9/11, the markets were obviously very anxious and for good reason. And I remember I was in a trading room with a friend of mine, and he had a position on when a fellow flew a Cessna over the White House. He got off his flight path. It was totally innocent, but the bottom fell out of the market. And by the time he could close out his position, he was already well in the red. So what this panic exit does is it flattens all your positions immediately. And it's actually a nice feature to have at the end of the day, so you know you have closed all your positions at the end of your day. You just hit your panic exit, and it will make sure that you are flat across the board. So any market that you are watching or entertaining, it will automatically flatten that trade for you. And I showed you the targets down here. Trade Manager, you can preset as many as 3 targets and have a runner in play. So you can split up your trade however you like. Say you want to take, split it into 3s, so you have thirds, and then you preset your profit targets. So let's say we're going to have one target at 10 tick, another at 20 ticks, and we're going to leave the third one on as a runner. All right, so we have all those features as well. And that is a very quick overview of all the tools that are included in the Raptor, in the new Raptor package.
All right, let me step in real quick. So the Trade Manager can feel overwhelming. And even in a presentation like this, I think it may feel overwhelming. I always liken it to like a word processor. I think a word processor can do about 75% more of what I use it for. But I don't sit down and try and figure out every aspect and every use of the word processor. I get it to do what I need it to do. It helps me do whatever I want to do faster, quicker, better, and I get on with my life. And so that's all software is supposed to do, including ours. The Trade Manager is an incredibly powerful tool. You don't have to understand or use everything Eric just talked about right off the bat. And in fact, when we start our training on Monday, we're going to start with the basics, which quite frankly is all you really need to succeed. And then, like most pieces of software, some people will want to dig deeper for more of the advanced features or adapt whatever they're doing to their own unique style of doing things. But all of this was designed to be able to be used right out of the box, so to speak, and easily. Of course, the beautiful thing about software is what starts off for a novice, it needs to also be sophisticated enough and useful enough to also be useful to a more advanced trader. So, for example, when you look at the chart here and you see the signals that have the numbers associated with them, the 1s, 2s, and 3s, which when you watch part 1 of this training, you'll see how important those are. Those are new. You'll also see additional signals on this chart, and that is for a more advanced approach. And so you can just trade the 1, 2, 3 signals and be quite successful. However, when you get more comfortable with the tools and trading in general, you have these more advanced setups available to you, but by no means required. And so again, the idea here is a flexibility in the tool, allowing everything from a novice up to an advanced trader to get value from it.